Hi, my name is Josh Ramras. I believe the Starbucks Corporation at $81.31 will outperform the market expectation. Starbucks conducts most of its business in the Americas while they have successfully expanded their global footprint into other regions as well. Let's take a look at the relative wealth chart. Starbucks' initial expansion was propelled by its rapid store growth. This led to an increase in CFROI, which ultimately led to an increase in shareholder value. However, in 2008, this all ended. Stocks of Starbucks plummeted by 50%. This was a result of a decline in sales growth and decreasing margins. Soon after, they brought back Howard Schultz from an 8-year hiatus. He successfully put the company back on track. I would like to now discuss three primary drivers that will result in increased shareholder value. The first is the new mobile order and pay app that Starbucks will be rolling out, which allows customers to pay and pick up their food items without having to wait online. This will improve output capacity in stores. When asked in a Q&A session on Investment Day how this would impact sales, they said they could not quantify this number. I developed a model using Excel to project how this will impact sales. The highlighted data was taken from an Investment Day presentation for U.S. stores. From there, I proceeded to calculate transactions per day, per month, per year, then transactions per week, per store, per day, per year. And then I calculated average revenue per transaction by dividing total revenues by total transactions. The highlighted items on the top line represent an increase in transactions per day per store. I added this to the current transactions per day per store. I would put the inputs in and then derive the total percent change in the yearly revenue. By increasing transactions per day per store by anywhere from 6 to 18% resulted in an increase of 15 to 28% in overall revenues for the United States. This is an astounding but very probable number. The second key driver is the company's focus on improving COGS and G&A. Scott Moore, the company's CFO, announced an initiative to save $1.1 billion in COGS, or 15% improvement. This, along with savings in G&A, will improve margins and cash flow. The third and last driver is what Starbucks calls the creation of new occasions. In other words, they want to capture more market share in the afternoon hours. This has been augmented by the acquisition of the La Boulange bakery, which enables Starbucks to offer hot sandwiches and other food items in the afternoon and nighttime hours. Ultimately, they expect increased sales from this initiative. Taking these three drivers into account, we can now go back to the relative wealth chart and project the increase in shareholder value. First, the second driver will improve margins over the long run. Second, both the first and third driver will increase sales as well as asset turns, ultimately leading in an increased CFROI. Based on these assumptions of steadily increasing CFROI as well as increased asset growth due to current store expansions such as Starbucks Reserve and Tivana, I calculated a valuation using the Holt Lens calculator to arrive at a valuation of $135.61, which translates into a 65% upside. In conclusion, I believe Starbucks is a lucrative investment.